And Burry, famous, in fact, he was portrayed by Christian Bale in the movie The Big Short.
Who are we now seeing go long on artificial intelligence?
In the first 3 months of 2023, a lot has happened. AI swept the globe, Credit Suisse and several big American banks failed, and China loosened some tight zero-COVID regulations, slowing down economic growth in 2022. Scion Asset Management, run by Michael Burry, reacted quickly and added noteworthy investments to its holdings, seizing some chances made available by the challenging macroeconomic environment. In the years leading up to the 2008 global financial crisis, renowned short seller Michael Burry made his millions by placing bets against the US housing market by purchasing credit default swaps on troubled mortgage-backed securities. Burry made about $100 million for himself and around $700 million for his investors. In this video, let's look at Michael Burry's latest buys and sells and discuss exactly what he thinks might be behind these bets. Customers of regional banks withdrew their deposits in large numbers due to the abrupt failure of Silicon Valley Bank and Signature Bank in mid-March. The torrent of withdrawals fueled worries about additional bank failures, caused steep drops in bank stock prices, and stoked worries about a financial crisis and credit shortage. During the first quarter, Michael Burry purchased significant interests in regional banks, including the bankrupt lender First Republic, before it was acquired by JP Morgan Chase & Co. According to regulatory documents, his hedge fund Scion Asset Management purchased 150,000 shares at the end of the first quarter for nearly $2 million. Before being taken over by authorities and sold to JP Morgan on May the 1st, in a deal facilitated by the government, shares of the faltering regional bank had dropped by more than 97% this year. Moreover, Scion purchased 250,000 shares of PacWest Bancorp, a company whose price has fallen nearly 79% this year due to the general volatility in the industry. During the first quarter, the fund purchased 125,000 shares of Western Alliance Bancorp. Almost 48% of the bank's stock has been lost this year. According to disclosures, Scion Asset Management purchased bank equities in the first quarter for a total of $23.4 million. The positions represent some of the same mid-sized institutions that were subject to severe investor pressure when Silicon Valley Bank and Signature Bank failed. Scion's recent investments include $2 million in San Francisco lender First Republic, $4.4 million in Western Alliance, $2.4 million in PacWest, and $7.6 million in shares of New York Community Bank. He also purchased $2 million of Huntington Bank, a regional lender in Columbus, Ohio. His purchases weren't all local. Scion has also picked up $4.6 million from industry behemoth Wells Fargo. He now has a new owner for one of the banks he wagered on. On May the 1st, authorities took control of First Republic, eliminating all of its stockholders and sold most of its activities to JP Morgan Bank. But shares of Scion's bank soared as new optimism about their prospects spread. By day's end, Western Alliance and PacWest had gained 13% and 12% respectively. These banks have experienced yearly declines of 48% and 76% respectively. Burry also bought a lot of energy and commodity equities in the previous quarter. Stocks in those industries typically perform well when there is an inflation and economic unrest. He made investments in Sibanye-Stillwater, Devon Energy, and Coterra Energy. In addition, he bought stocks in several other businesses including Zoom Video, The Real Real, and Signet Jewelry. On the other hand, Scion sold its shares in Wolverine Worldwide, SkyWest, Curate Retail, Black Knight, and MGM Resorts. Alibaba, JD.com, Geo Group, and Coherent were the only companies from the fourth quarter of last year to remain in the business. Scion's stock portfolio increased in value by 130% to $107 million because of Burry's purchasing spree, which increased the company's total number of holdings from 9 to 21. Burry's moves comes during a severe banking crisis in the US. There were numerous bank withdrawals of money, which caused the stock market to fall. A bank run that began at Silicon Valley Bank was the root cause of the present banking crisis. SVB was important to the economy and startups. Due to a bank run brought on by the bank's declaration that it would raise $2.25 billion, the bank was forced to collapse. Burry placed a wager on the banks in line with his optimistic views about the banking industry, believing their stocks would rise once the panic subsided. Interestingly, on January the 31st, Burry, notorious for providing grave warnings and pessimistic predictions regarding stock market disasters, only tweeted the word sell. In late March, when he tweeted that he was wrong to say sell, he appeared to retract his advice. In a strict sense, these bank investments are not surprising at a time when the banking industry is reeling from the worst confidence since the 2008 catastrophe that made Burry famous. Burry altered his view toward the middle of March after predicting the failure of another significant bank. Scion Asset Management's founder claimed that the current crisis did not pose a threat and could be handled quickly. The investor tweeted on March 14th that this issue could settle very fast. I don't perceive any real threat here. The National Bureau of Statistics of China reported a 4.5% increase in GDP, a result that exceeded expectations and may have been aided by retail sales climbing 10.6% and industrial output increasing by 3.9%. These numbers suggest that China's growth story may still have plenty to tell. This risky move shows Burry's confidence in the regional banking sector's strong underlying value and probable recovery after a significant market sell-down. Not all significant investors flooded banks amid the first quarter's upheaval. George Soros's family office sold off all of its holdings in Citigroup and reduced its stake in Memphis-based regional lender First Horizon by 38%, while also closing a $1.7 million short position on cryptocurrency-friendly bank Silvergate Capital, which announced in March that it would wind itself down voluntarily. The Soros Fund did purchase modest call options in UBS Group AG and Charles Schwab. The largest hedge fund in the world, Bridgewater Associates, sold bank equities of around $180 million. This is similar to what Warren Buffett did with airline equities in the past, and what he's doing now with Japanese trading companies. He may not be able to identify a clear winner among the group, but he believes the team will succeed as a whole, so he places a basket bet. He also tweeted that he expected the financial crisis to be resolved swiftly, and that he did not perceive any real risk at the time after the collapse of SVB. Burry wagers on community banks may highlight the opposing argument that he is wagering against the banks. Burry may have sold the shares since March 31st. It is unclear if he still owns them. The investor, though, is holding unrealized losses if he hasn't.